Hey guys, what is going on? Welcome to the video. So over the past 6 months, I've talked a lot about the MSO sector as my highest conviction sector trade, and over the past week, we're seeing these stocks finally start to take off. In just the past 6 trading days, the sector has gone up over 25% off of lows. We're going to be going over a couple major catalysts that are causing this move, why I personally think this is just the very beginning of the huge run-up we're going to see, and then we're going to be going over my personal trades and portfolio and update how that has performed so far. The catalyst that we got a couple Fridays ago was a Republican proposed bill called the States Reform Act, which will put states in the driver's seat and codify cannabis reforms throughout the U.S. And this is led by Nancy Mace, a U.S. representative for South Carolina. The press conference on this States Reform Act is going to be on Monday at 2 p.m. Eastern Time, and there's been a lot of excitement in this sector leading into that date. And essentially what this proposed bill would do would officially make MJ a regulated substance akin to alcohol and slapping it with a 3.75% excise tax. And the proposed legislation would put the interstate regulation of MJ under the Alcohol and Tobacco Tax and Trade Bureau, which is an agency within the Treasury Department. The U.S. Food and Drug Administration also would have a limited role in regulating products. The bill is currently being circulated among stakeholders and not expected to be filed until the end of the month. Now, the most important thing about this bill is it now puts pressure on the Democrats to pass their own bill, which would likely be the Safe Banking Act included in the National Defense Authorization Act, NDAA. Now, I've talked about this in a couple videos, but at the end of September, the U.S. House passed the Safe Banking Act as part of the defense bill, the NDAA. As of right now, this bill is being reviewed by the Senate. Now, in the past, the Senate has rejected the Safe Banking Act multiple times, and they do have the right, if they choose, to take the Safe Banking Act out of the NDAA. And it's been expected that any time in November, so any day now, we're going to get the finalized NDAA. And now it's looking like an even better chance that safe banking is included in this after this Republican proposed bill is putting pressure on the Democrat side of things and on Schumer. If the Safe Banking Act was to pass, this would absolutely be massive for these American cannabis companies. It would give them access to major banks to get actual good interest rates on their loans. Right now, a lot of these companies are paying 10 to 15% interest. There would also be a chance, like we've talked about in previous videos, that the Safe Banking Act would allow these MSO companies to uplist onto the major exchanges. Right now, they just trade over the counter. That would be the largest possible catalyst to come through for these companies. They trade at crazy cheap valuations. Just taking a look at this report from Needham a couple weeks ago, they show a visual of the MSO industry growth and valuation versus other industries. You can see there's one outlier for the growth and the valuation that these trade at, and that is, of course, the MSO sector. The key point they make is the MSO valuation is in stark contrast with growth rates compared to other industries. Now, why do these stocks trade for such cheap valuations? Number one, they're very easy to manipulate by shorts, push these prices down because there's such low volume in the over-the-counter market. The majority of institutions do not invest and do not touch the over-the-counter market, which institutions bring the big money and institutions move stock prices. If they don't have access to invest in these MSO companies, no wonder why the valuations are so low. But when that uplisting happens, you better bet that institution money is going to be flooding in. This would be the hot sector. I think all of these stocks would have a 100, 200, 300% plus move to the upside. That would be my personal prediction if the uplisting was to happen. We're seeing MSOS, which is the ETF that tracks this sector. We're seeing a very large move in the ETF backed by volume, confirming that bottom and breaking out of this sector downtrend. The volume tells a story. There's been such low volume for the past 6 months with this sector, a very low volume sell-off and a high volume bounce. That is the best indication you can have for the sector bottoming right there. There's also been a lot of option open interest in the MSOS ETF at an all-time high rate, and that just kind of tells you that the market is expecting a much larger move from this sector. So those catalysts are just why I think this is just the very beginning of this sector taking off. Whether the Safe Banking Act passes this month or not, we'll see. A couple scenarios, if it does not pass, we could see these stocks go back down. I personally would not expect these stocks to make a lower low, but that is a possibility if nothing passes, if none of these proposed bills do end up passing. If it was to pass, I think we see these stocks take off. If it did allow an uplisting, which is a possibility, that is when I think we see a 200% plus move for all the stocks in this sector. Now, doing a little valuation comparison between a couple of these MSO companies and Tilray, which is widely seen as the best Canadian cannabis company, and just to show you the difference in valuation with these companies, Trulieve currently has a fully diluted market cap of 5.47 billion. Tilray has a current market cap of 5.3 billion. So these companies are valued very similar. But taking a look at their last quarter earnings numbers, we can just see the difference in valuation with these companies. So Trulieve had more revenue, 215 million, versus Tilray's 168 million. Trulieve is growing at a much faster rate at 78% year over year compared to Tilray's 43%. And the biggest thing here is profitability. Trulieve made $40 million in the quarter of net income, which is their pure profit, while Tilray stays far from profitability with net income of negative $41 million for that quarter. And with these numbers as well, keep in mind that these Q2 earnings numbers were before Trulieve acquired Harvest Health, which is going to add another $100 million of quarterly revenue. Before completing the acquisition of Harvest, Trulieve was sitting around a $3.5 billion market cap, while Tilray was over a $5 billion market cap at that time. And once Harvest numbers are reflected along with Trulieve, it's going to have over 300 million in revenue quarterly. So that just shows you how wide of a valuation gap there is between Trulieve and Tilray. Biggest reason because Trulieve trades over the counter, can't be accessed by most institutions, and is just not as recognized as a company as Tilray is. That would obviously change if the uplisting was to happen. Doing another comparison with this, Cresco Labs, ticker symbol CRLBF, compared to Tilray, this may be an easier valuation comparison because Cresco has not made any acquisitions like Trulieve has to add to that market cap. So in Q2, Cresco had 205 million in revenue, up over 120% year over year, compared to Tilray's 168 million in revenue, just up 43% year over year. Cresco had a slight loss of 4.8 million, but they are getting very close to profitability. Big improvement year over year compared to Tilray's net income, of course, of negative 41 million. If I was looking at these companies blindly, I would say that the company on the left should be double the valuation of the company on the right, just because it has so much more growth and profitability. In reality though, it's valued $1.5 billion less than Tilray is valued at. So that just shows you the valuation gap between these Canadian companies versus these American MSO companies. Something that would change very quickly if these MSO companies were uplisted. We would see these MSOs fly by these Canadian companies valuation wise. One more insanely cheap valued MSO company is MariMed, ticker symbol MRMD, has a current market cap of $292 million. And if we just value this on a price to earnings basis, we can take their Q2 net income of 7.5 million, multiply that by 4, and get 30 million in yearly net income. That comes out to a current price to earnings ratio of 9.7. Now also keep in mind that this company just grew revenue over 200% year over year. No other sector has companies trading below a 10 price to earnings ratio with this type of growth. 200% growth companies would commonly trade over a 50 price to earnings ratio in any other sector. These companies are still so insanely cheap even after this 25% bounce for the sector. There's no doubt in my mind that if safe banking passed and these stocks were able to be uplisted to the major exchanges, that the MSOS ETF would hit new highs, and I would not be surprised one bit to see this ETF at $100 plus, moving as a momentum trade off of FOMO, something that I believe would happen if the uplisting did happen. Of course, that is far from a guarantee, but at some point in the future, these stocks will be uplisted and have that major move then. It's more of a matter of when and not if. So taking a look at my sector portfolio now, the only change that I made since the last update was just added a couple more MariMed shares, ticker symbol MRMD, just because that valuation was getting so crazy cheap. But my cost basis for this whole portfolio is $46,835, and overall I'm currently up 15% and 7.2k in unrealized gains. When it's all said and done, I believe that this portfolio will easily be over 100k when those catalysts that we talked about played out without me adding any more money to this account. I'm personally riding all the ups and downs with this portfolio, holding until all those catalysts that we talked about played out. When that uplisting happens, in my opinion, like I was talking about, those stocks can go absolutely wild. Whether that happens sometime before the end of this year, or whether that happens a couple years from now, however it plays out, I'm holding until those catalysts play out, riding all the ups and downs. A couple of weeks ago, I was red on the majority of the positions. Now, of course, I'm very green on most of these. And we'll see how it plays out from here, but it's still It's still by far my highest conviction sector trade, and where I believe the biggest opportunity is for the next couple years. So yeah, I hope you guys enjoyed the video. I hope I provided some value to you. If so, make sure to hit that like button and subscribe button. It helps me out a ton, and I would greatly appreciate that. If you are interested in joining the private Discord chat, That's the first link down in the description. Getting buy and sell alerts on any moves I'm making in the market. You get full access to my short-term and long-term portfolios. You can ask me any questions in there, and you get nightly watch lists for trade ideas for the next day. That's the first link down in the description. Thanks so much for watching, guys. Really appreciate it. I'll catch you next week. Good luck to everybody in the market, and let's get rich.